Hello and welcome back for another Quant price prediction update, and in this video I'll be diving deep into the technical analysis here on the Quant chart and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Quant is holding above a key area of support at around the $97.3 mark, which is now acting as support for us to continue gearing up, where we could possibly see another bounce and get a move giving us a high above the $100.3 mark, which is our next key area of resistance. And if by any chance that key area of support does not hold, then we can expect a breakdown to the lower side, possibly giving us a retest of that key area of support before we can continue seeing further breakdown to our next key area of support at around the $94.3 mark. Quant has also continued to obey the Elliot wave structures, and zooming out to give you my Elliot wave analysis here on the Quant chart, you can see that after seeing our bear market low at around the $40.1 mark, we saw a 5-wave move to the upside, giving us a high at around the $229 mark, completing the formation of this larger Elliot wave count 1. Then we started a corrective structure in the formation of a larger Elliot wave count 2, whose minimum target areas I have highlighted on the charts using this red target area that I came up with by connecting the fibs from the low of the first wave to the high of that wave 1, giving me a minimum target area between the fib level 0.5 and the fib level 0.78, which is an area that lies between the $134 mark and the $80 mark, which is an area that we are yet to fully maximize. Though we are seeing, you can see that we are trading within the minimum reversal area, and since this is a second wave which is corrective, I have also been expecting to see an ABC corrective structure also play out, where you can see that we have been breaking down in this wave A, then we saw that wave B, and have been expecting one more leg down in the formation of this wave C to the lower side. And what that means is that if by any chance we lose our key area of support at around the $97.3 mark, then I'll be expecting further breakdown to our next key area of support at around the $94.3 mark. And if by any chance we also lose that key area of support, then Quant will be able to put in place the one more leg down in the formation of this wave C that I have been expecting. And once that move plays out, we could possibly see an $80-point-something Quant in the formation of this wave C, in a move that will be able to put in place the low for that wave 2. And in case such a move plays out, I believe that will be a perfect entry to get back into Quant, so that we can be able to ride this massive pump in the formation of this wave 3, where I'll be expecting to get confirmation by a 5-wave structure that will follow, followed by an ABC corrective structure to the lower side. Once we see that low and we see such a move here on the charts, that will be enough confirmation that the low for this wave 2 is in, and the start of an impulse in this wave 3 has now started. So that is what I'm expecting here on the Quant chart. I'm still expecting one more low, but also have in mind that it is not always that we get that one more low in the formation of that wave C. There are still chances that the low is in, and Quant could give us the 5-wave move to the upside and start its impulsive move to the upside in the formation of that wave 3. So we need to have that in mind. And for those that know this better, it's the best time to DCA into these markets at the time that we are seeing such breakdown in the markets, and that is not financial advice. And also taking a look at the indicators on the RSI, we are trading at around the 42 mark. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices. So let's be patient and see how that plays out, and I'll be keeping you updated.